Hello everyone. Gold is back in focus this week and for a good reason. Buyers stepped in for the second consecutive day as expectations for a December rate cut and ongoing geopolitical tension brought back safe haven demand. Let's check the technicals. Right now, gold is testing a very interesting level, $4,150. On the 1 hour chart, we can see over the last week gold was trapped inside a tight consolidation range between $4,020 and $4,100, a sideways box where neither buyers nor sellers had control. Yesterday, we finally broke out of that range, pushing straight into the next key zone, the one we're testing right now, $4,150. It's the first major resistance after the breakout. So for short-term traders, this level is key to watch today. If economic data comes in soft or mixed, we have consumer confidence, we have PPI and retail sales, we might see bulls eyeing 4,200. But if the data disappoints, $4,100 is the level that needs to hold. It is the breakout level. So a drop below it can pull us right back into the previous range. Now zooming out to the 4 hour chart. The bigger story is much cleaner. Gold has been reacting constantly to both supply and demand zones, forming a clear ascending structure. We previously rejected the 4,240 supply zone, which is the exact same area where a head and shoulders formation triggered a heavy reversal last time. So after that, prices retested $4,100 multiple times. It turned it into resistance. And yesterday, we finally broke above it. And now this level, around $4,100, as we said, is a key support for bulls. So as long as we stay above that level, bulls should be eyeing the next barrier at $4,170, the upper level of that formation. A clean breakout above it, above the $4,170, might open the path toward $4,200 and $4,230, where sellers previously dominated. For now, momentum favors the bulls, but today's data will decide direction. If numbers support rate cut expectations, gold has room to extend higher. If not, watch $4,100 for a possible retest.